Hi everyone, welcome to today's webcast. I'm Reena Agrawal, Senior Research Economist at Veros Real Estate Solutions. Today we are going to talk about the spring 2025 housing market. Spring is typically the busiest in the housing market. So here we are.
And I'm Eric Fox, Chief Economist here at Veros Real Estate Solution. So the spring market always brings a lot of anticipation, and I think this year it's certainly proving to be dynamic as well.
You're right about that. So when we were heading into spring, it seemed like the housing market was gearing up for a stronger showing than last year.
That's correct. We started to see some encouraging signs. Inventory levels, while still below what we consider a healthy balanced market of 5 to 6 months supply, were higher compared to last year. So in February 2025, we had about 3.5 months of supply available nationally with 1.24 million homes on the market, which was up from 3 months and 1.06 homes on the market in February 2024. So this provided buyers with more options than they had seen in quite a while, although this is still less than pre-pandemic levels.
So you're right, more homes on the market. That was a bit of good news for buyers. Finally, they got some breathing room in terms of selection, more options to choose from, and also mortgage rates seem to have stabilized for a bit there.
Mortgage rates have held relatively steady around 6.6% throughout March and the early part of April of this year. So I think there was a sense that both buyers and existing homeowners were starting to accept these rates as the new normal. The prolonged period of hoping for a return to 3% seemed to be fading, and many were ready to move on with their lives and purchasing plans.
Yep, it seems like that psychological barrier might have been broken for some, but then we saw a bit of jump last week with mortgage rates, didn't we?
Yeah, mortgage rates increased by about 20 basis points in the second week of April, pushing the average from 6.6 to 6.8%. So this uptick clearly had an immediate impact as we saw mortgage purchase applications decline by 8% compared to the previous week. That's according to the Mortgage Bankers Association. And that highlights that while some buyers have adjusted to the new mortgage rate levels, there's still some sensitivity to interest rate fluctuations.
Well, that's a reminder of how delicate the market can be. And it's not just mortgage rates. Consumer sentiment has also taken a hit recently, and that can't be good for big purchases like homes, I feel.
Yeah, the latest data on consumer sentiment is concerning. People aren't just worried about persistent inflation. There's a growing unease about their personal financial situations, including income security and the potential for job losses. We even saw a sharper increase in the U6 measure of underemployment last month, which reached 7.9%. This broader measure, which includes those underemployed and those marginally attached to the labor force, suggests a more nuanced weakness in the job market and can certainly make potential homebuyers think twice before taking on a significant financial commitment, such as purchasing a new home. So a combination of affordability concerns and for some anxiety about their personal financial situation. What's your forecast looking like for the spring 2025 housing market given these factors, Reena?
So I think we are likely heading towards a slowdown in the pace of home price appreciation compared to what we've seen last year and 2 years back. And the increased inventory will naturally moderate price growth. And the hesitant buyer sentiment that you talked about, that is fueled by higher rates, economic uncertainty, that will likely keep some buyers on the sidelines.
We also might see more buyers exploring adjustable rate mortgages as a way to secure a lower initial interest rate. Interestingly, nearly 1 in 10 mortgage applicants during the week of April 11th saw an adjustable rate mortgage. That's the largest share we've seen since November 2023, as the average rate for a 5/1 adjustable rate mortgage was lower than the 30-year fixed rate. That adjustable rate mortgage trend is something to keep an eye on, though it does come with its own set of considerations. And as always, the national picture doesn't tell the whole story. We're still seeing those regional differences. We'll continue to see a divergence across the country. Some markets, particularly in parts of the Northeast and Midwest, where inventory remains tight, will likely continue to show strength. Conversely, other markets, especially those that have seen significant new construction and are now facing softer demand, might experience some level of price correction or slower appreciation.
You're right about that. And our home price forecast does reflect this divergence. We project the strongest price gains in the Northeast and Midwest, pointing to cities like Rockford and Springfield in Illinois, Hartford and New Haven in Connecticut, and Rochester and Buffalo in New York. On the other end of the spectrum, markets in Florida and Texas, they are expected to see weaker appreciation or even some price corrections. And that is primarily due to an oversupply of homes. There has been a surge in new construction in these regions, and there is an increase in financial strain because of rising insurance premiums. Also, Veros forecast is currently projecting a national house price increase of 2.4% from March 2025 to March 2026. And this is indeed a little slowdown compared to our previous forecast.
So a spring market with not very clear-cut answers. Yep. For our viewers out there, the takeaway as we navigate this landscape is to stay informed, understand your local market conditions, understand your financial situation carefully, and don't make rash decisions based on national headlines alone.
Excellent insights, Eric. Thank you so much for breaking down the complexities of the spring 2025 housing market for us today.
And don't forget to subscribe to us on RiskWire.